Promoters of Zee Entertainment have sold 76 lakh shares worth 322 crore rupees since February 13th. Nimesh is here with all of the details. Nimesh.
So this has come as a bit of a negative surprise clearly for the markets, given that at a time when, the promoters are so eagerly looking at striking a deal with a strategic partner. We've been seeing a lot of reports about, Sony being interested, Comcast being interested in buying stake. And here comes a time when, there are intimation to the stock exchanges that the promoters have sold close to 76 lakh shares. To me, it looks like the lenders have sold these pledged shares, towards the year end, and maybe because of that, you've seen this intimation coming on April 1st. Now, as things stand, the promoter holding in Zee Entertainment is close to 40%, and of that 40%, close to 59% is pledged with the lenders. I'm saying this has come as a negative surprise, because there were some agreements with the lenders that they will give enough time for the promoters to strike a deal, and September is a deadline which has been set, by the lenders. Till then, the promoters to sell the stake and raise money to pay off the debt. So this will be seen as a bit negative for the stock in today's trade. The whole point is, given that such a large holding of promoter is pledged with the lenders, will there be a negative knee-jerk reaction is something to watch out for. But clearly, yesterday's intimation to the stock exchanges of promoters selling 76 lakh shares will be seen as a bit negative for Zee in today's trade.
Okay, all right. Nimesh, looks like the street was sensing that yesterday. The stock ended virtually at the low point of the day with a cut of around 3.5%. But otherwise, Cyient as well. That's another company that will be in focus today on the back of expectations of delivering lower growth. Rima is with us to run us through all those details. Hi, Rima. Good morning.
Hi, good morning. Yes, a warning alert coming in from Cyient where they say the company will post a lower than expected growth in Q4. There was a delay of a large order worth $5 million in the DLM business, which is design-led manufacturing business, as a result of which DLM will post sharply lower revenues in Q4. This delay in order was on account of regulatory clearances at one of their clients. Even services revenue growth, which is about 88% of their overall revenues, that is expected to post softer growth. So now the company is expecting only about a 1 to 2% growth in the services business on account of deferment of orders in aerospace and communication. That said, the company remains confident of their FY20 outlook. Now, HDFC Securities says that now they expect design-led manufacturing, which is about 10-15% of their overall revenues, to report a 15% drop in their revenues versus a 9% drop that they were earlier anticipating. Services business will now grow at 1 to 2% according to their estimate versus a 4.5% growth that they were expecting, and margins too will decline by 80 basis points sequentially. So negative news coming in, and Q4 will be quite muted for Cyient. Back to you.
All right, thanks a lot for taking us through all of those details, Rima. But time for a quick break now. Up next, we'll get you a check on the cues to watch in the futures and options space. Stay tuned.